Lee, I wanted to go first to you for your analysis of the session. The market really receiving a boost today on this news out of China. The ASX rising the most in a month today. Talk us through it.
Dan, coming into the market session today, the leads really weren't so good. We saw a negative session in the US on Friday and equities generally lower, but the market having a great day today, up by 1%. It did change during the session as we heard from China. They are planning about $300 billion worth of new projects. They're looking for funding for these private-public partnerships. And in Shanghai, we have seen the exchange there rising to fresh 7-year highs led by the infrastructure as well as the transportation stocks. So that's been great news for the Aussie dollar during the session. It's also been great news for the material stocks. We have seen iron ore futures, the Dalian Iron futures over in China up by 1% during the Asian session. So the iron ore miners doing well. Fortescue up by 2.8% today. We've also seen Rio Tinto gaining 1.6%. And some stocks reaching all-time record highs. It does look like there's been a boost to some stocks from that small business tax as well as the tax deductions, a $20,000 tax deduction. In particular, stocks which have exposure to the car market doing well. We saw AP Eagers reaching a 52-week high today. We also saw Eclipse, which does fleet leasing, hitting a 52-week high. So those stocks doing well. But all in all, with the US on holidays tonight, the UK on holidays tonight, and Hong Kong on holidays, not a huge lot of volume going through, although we saw some big moves on the market today.
Rick Spooner, over that you've been watching today, of course, Sirius shares soaring on news. Independence Group has struck this $1.8 billion deal. This is a 35% premium to Sirius's last traded price, and it also has the support of the board. Do you see this as a good deal for shareholders?
I think it's a good deal for independence shareholders making this takeover for Sirius Resources at what's probably the low of the cycle for nickel prices. If we have a look at nickel prices, and I'll just bring up a chart of the last, I've got the chart of the last 5 years just behind me. You can see that we're probably at the lows of the cycle, the peak seen in this particular round in 2010. So good news for independence there. Its main asset was the Tropicana mine, this Nova Bollinger deposit, which is being developed at the moment. Probably the most attractive nickel assets in Australia being under development. The other assets of Sirius will go into another vehicle called S2. And I guess it's good news for Sirius shareholders as well, because this is a cash and script offer. So they will still be getting script, so they will be getting exposure to the growth potential of the Nova Bollinger deposit as well. So all in all, it does look like a good deal, medium to long term, for both of these stocks. In terms of today's performance, though, of course, we did see Sirius shares absolutely soaring, up by more than 20%, while we did see Independence Group shares down by around about 12%. So altogether, in terms of today's share price performance, to be expected, given that usually the company doing the takeover does see a drop in share price because they're paying a premium, and the company being taken over sees a rise in share price because they're being paid a premium.
Yeah, I think that we might see another bid.
It is possible. If we have a look at Sirius Nova Bollinger resource, I think it's a very attractive asset, and I guess it's at a time when the nickel price has been coming under pressure. So it is a possibility, but I guess in terms of how the shares are being priced at the moment, they are being priced for an independence takeover. If we have a look at this particular offer, it's for 0.66 independent shares plus 52 cents. That equates to $3.91. And if we have a look at where Sirius finished the day, it was at $3.90, so a 1 cent difference there. So the market really not pricing in a bidding war here.
Rick Spooner.
Demonstrate how difficult this business is at the moment. If we have a look at Skilled Group, it's the largest workforce solutions provider in the country, and with iron ore, coal, oil all seeing a slump in 2015, it's been pretty difficult. The big miners like BHP, Rio cutting costs, and that doesn't bode well for contract miners. So I guess in this type of business, what there are very low margins. So scale is hugely important, and by combining the two businesses, you will get more scale despite the low margins in this business. And then it's all about the synergies, combining all the back office and trying to extract some of that value out. Now, the last offer at the end of December, early January, $1.38 was the price. The market and Skilled will probably be looking for more than that, so more around that $1.60 mark. But given the current environment here in Australia, it's quite difficult to see, because we have seen that massive downturn in terms of iron ore, oil, coal, really reflecting on both of these businesses.
All right.